Welcome to Illuminati Silver. We tell the truth about silver. Today is Sunday, the 2nd of October 2022, and we're repeating the video that we produced yesterday, which is our normal weekly update. We just produce it under a different thumbnail and banner. Last week, we saw gold and silver prices rise in US dollar terms, though they fell in sterling terms. Not surprising, bearing in mind that the week before, sterling tanked. However, it has begun to recover again, albeit slowly. What's envisaged over the next couple of weeks? Well, let's take a look. Looking at precious metals first, gold rose $17 last week, rising from $1,644 to $1,661, having hit a high of $1,675 and a low of $1,615, a rise of 1%, but putting in a lower high and a lower low compared with the week before. In sterling terms, gold finished the week at £1,489, that's down £28, and in euros it closed at €1,695, that's down €3. The reason for the fall in the price of gold in sterling terms has been the increased strength of sterling this past week after its abysmal fall the week before. Now, silver rose 15 cents, rising from $18.89 to $19.04, having been as high as $19.30 and as low as $17.98, a rise of 0.8%, very similar to gold, just marginally less. And again, though, like gold, putting in a lower high and a lower low than the week before. In sterling terms, silver closed at £17.08, that's down 34 pence. And in euros, it closed at 19.44 euros, that's down just 0.06 euros. The gold to silver ratio rose ever so slightly from 87 to 1 to 87.2 to 1. Now let's look at the prediction we made last week. This is what we said. We expect to see gold trade between $15.75 and $16.75, and we forecast silver to trade between $17.75 and $19.75. And this is what happened. Gold and silver both traded within those trading ranges. The difference between gold's high and low was $60, some $12 higher than the previous week, and the difference between silver's high and low was $1.32, compared with the previous week's difference of $1.13. So we had increased volatility, but not significantly so. Now we shall cover more on this after we look at the other financials. Bitcoin is currently standing at $19,329, up $254 on the week, though it has been moving within a sort of $2,000, $2,500 band during the course of the last 7 days. Equities were down again quite significantly, though, this past week. The Dow Jones closed on Friday at 28,725. That was down 500 points on the day and down 865 points on the week. The S&P 500 closed at 3,585, down 54 on the day, that's on Friday, and down 108 on the week. And the Nasdaq Composite closed at 10,575, down 161 points on the day, and down 292 points on the week. So a bad week for equities, though the falls were not quite as large as the week before. Oils were slightly mixed this week, though at the margin. Brent crude closed at $85.14, that's down $1.01, and WTI crude closed at $79.49, that's up 0.75 on the week. Now the dollar index stands at 112.11. That is down 1.08 points on the week, but earlier in the week we did actually see the dollar index surpass 114. Now moving on, let's take a look at the economic data announced last week and the important, in fact very important data to be announced this coming week. Looking at last week's economic data announced by the United States and just choosing some key elements, we can see that on Tuesday, durable goods orders for August were minus 0.2%, slightly better than expected because expectations were minus 0.5. though the figures in July were minus 0.1. The Consumer Confidence Index surprised us a little, because for September that has come in at a positive 108, compared with expectations of 104. So that was quite interesting to note. And new home sales also for August were up some 185,000 higher than expectations. Then on Thursday, we have the initial jobless claims, which were down, in fact, at 193,000, compared with expectations at 215, and the continuing jobless claims were also improved upon at 1.35 million. Now, whether these falls will continue remains to be seen, but even though we're talking about economic recession, at the moment the jobs figures are looking still relatively healthy. However, what is not healthy is the PCE index, and we can see that the core PCE price index for August was 0.6%. which basically is 0.1% higher than expectations and 0.6% higher than the previous month. This means that year-on-year core PCE is 4.9%, and the PCE price index year-on-year is 6.2%. And you can see with the decline in gold and silver prices on Friday that this caused essentially that to occur. Why? Because the dollar index strengthened, because the higher inflation is going to be, the higher interest rates are likely to rise too. Real consumer spending, though, was marginally up on the previous month. Now, what have we got coming out this coming week? Well, quite important actually, a few important days this coming week. We have the S&P Manufacturing Index and the ISM Manufacturing Index on Monday. Worth looking at there. Tuesday, factory orders. Wednesday, we have the ADP Employment Report. And that usually gives us an indication, not necessarily a guarantee, but an indication as to what's going to happen on Friday. Why? Because on Friday we have the non-farm payrolls. And they are quite crucial. We also have the services indices on Wednesday as well. Thursday, the standard jobless claims, and then Friday, non-farm payrolls, plus all the consequential data that runs with that, and average hourly earnings, labour force participation, etc. And we also have the consumer credit figures. So it's an important week for data. Now, when I say important, it would be even more important if the Fed's FOMC had a meeting in October, because, quite frankly, it would base a lot of its next interest rate decisions on these figures. But as they're not meeting now until November, these figures are very important. The impact will be slightly less than if there was an imminent meeting. Now, we stated last week to watch out for the PCE data on Friday, as this could prove critical, and we believe to some extent that it has. The Commerce Department released the latest inflation figures vis-à-vis the PCE that revealed that core PCE jumped 0.6% in August. It shows that inflation is still increasing. Now, the preferred gauge used by the Federal Reserve, the PCE price index, revealed that inflation accelerated even more than expected in August. On a year-over-year basis, as we saw, the core PCE, which omits food and energy costs, increased 4.9%, above projections of 4.7%. And it's important to bear this in mind because this will be on the analysts' minds too. Now, gold began to stage a recovery before these figures were announced, and silver did, though, manage to bounce off a major support level of $18. Now, we mentioned last week the chartists or technical traders are now rather despondent gold and silver prices and expect to see gold eventually decline to $1,500. And we can also see that occurring in the months to come. The trend will be confirmed, though, should gold breach 1,600, which it hasn't done so far. To the upside, we must see gold rise above 1750 and really significantly surpass 1800. Otherwise, the downward trend may indeed continue. Silver is also in decline, as witnessed by lower highs and lower lows. And once $18 is breached towards the downside, we can see silver trend ultimately towards the $15 level, not in one fair swoop, but over a period of time, especially if recession is on the cards. Now, some analysts, particularly technical traders, will have witnessed a hammer forming for the week, which is a bullish sign and suggests a potential buying opportunity. That, in our view, will be short-lived though, especially providing the US dollar remains strong. And whilst there may be an odd dip here and there over the next few weeks, and a few blips as well upwards, we still expect the dollar to remain strong of the major currencies, and therefore continuing headwinds for precious metals. Now, that said, we are unlikely to see another change of interest rates in the US until November, and so we're expecting really a period of consolidation between now and then, though we suspect overall the trend to be downwards, even though there may be a few upward blips in between. We suspect, unless there is some major announcement over the weekend, gold and silver prices to open slightly lower on Monday. Though if the technical chartists are right, we may see a little blip in silver. So what are we expecting to happen over this coming week? Well, we're expecting gold to trade roughly between $1,600 and $1,700, with $1,550 to $1,725 as outliers. We forecast silver will trade between $1,775 and $1,975, with $1,725 and $2,025 as outliers, though we will be quite surprised if it does hit $20. Of course, we still have to bear in mind and watch out for the situation in Ukraine, because as tensions increase even further there and more threats coming, that will provide an opportunity to keep gold and silver, and particularly gold prices, higher because of the risk potential involved. Now, at the start of the video, we said we've got an important announcement. Last week, we announced that we are planning on changing the name of the channel, and thank you to everyone who suggested alternative names. What we'd like to do is to get a view from you as to when we do change the name, which we suspect is likely to be in November, basically how you would like us to conduct our channel. Our thoughts at the moment is to produce 3 videos a week. One video talking about wealth and how to increase it or not lose it. The second video to cover items such as non-precious metals, so they could include equities, cryptos, bonds and other asset classes. And then the third video of the week, probably the weekend one, talking specifically about gold and silver. They are our thoughts at the moment, but at the end of the day, we have to satisfy you, our audience, that we're providing the information that you require. So please feel free to share your suggestions in the comments below. Meanwhile, thank you so much for listening. Please, if you haven't done so, subscribe and press the bell sign, and also have a wonderful weekend and a prosperous week ahead. Illuminati silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.